I just want to make a quick video here today talking about some of the things that stood out to me in GameStop's recent quarterly earnings report. So the hype's kind of died down. Everyone's really had a chance to digest it now. And here we are. What do we see? At the end of the day, there's profitability. Of course, there's the naysayers. Oh, they're not going to be profitable in Q1 and next year. Oh, this is a one-time thing. But people who aren't reading about the company simply do not understand it. So in my eyes, I don't understand why anybody would listen to just random articles, because they are evidently not reading the same numbers I'm reading. And at the end of the day, they're saying things like, oh yeah, the cost-cutting efforts are like temporary, or they're still gonna have to raise capital, and all this baloney that just is simply not true. Their cost-cutting efforts are long-term efforts. It's not like, oh yeah, the costs are cut for just this quarter, then they're just gonna go back to the way they were. So I just think that's pretty funny out there. But I wanna get into a couple of the numbers that stood out to me. I took some notes today. So Q4 2022 overall revenue versus Q4 2021 was actually down ever so slightly, 28 million, but essentially it was sideways. It was pretty much the same. But the exciting thing is the net income. Net income for this quarter was 48.2 million. The same quarter last year, negative 147.5 million. That's a near $200 million swing on the bottom line, despite the revenue being sideways. That's incredible to me. And if you look at the stock Dillard's, ticker symbol DDS, it's a great example of a company that's delivered value to shareholders. And if you look at their revenue growth over the past 10 years or so, nothing massive, nothing insane, but they've had consistent dividends and 2 special dividends in the past 2 years, as well as consistent share buybacks. And the golden thing that really stood out to me, it's a family of Dillards that own the company Dillard's. For the most part, they have a large ownership if you look at insider ownership, and most of them, from my understanding, have directly registered their shares. So that just makes it harder to bet against the company that's buying back their shares. Their insiders are registering them. So that's just an example to look at, right? Kind of a case study. But what I'm getting at here is I think GameStop has growth ahead of it. So having said that, I really believe Web3 and collectibles will drive them forwards. And just seeing what they're doing now with their cost-cutting efforts, collectibles and Web3 are both higher margin categories. So as they grow those, their margins will grow along with their top line revenue. But of course, that's just my personal opinion. You're more than welcome to disagree. But a couple other things that stood out, of course, the lower selling and general administrative costs, lower cost of sales, and then you got to look at percentage of sales relative to the same quarter last year. That's where you can see the difference. And yeah, growth in collectibles for the same quarter last year was only 12.4%. This quarter, it was 14.1%, and that's of their entire sales. So the collectible category is growing right now. The software category is actually shrinking. Hardware is kind of moving sideways, but inevitably, I really look for the company to put Web3 or digital assets, something along those lines, on the income statement. So yeah, the question is now, of course, will they stay profitable? That is the magic question. We'll find out. Numbers don't lie at the end of the day. And even if they're not profitable in the first half of 2023, I'm really not concerned. I think they'll be overall net profitable by the end of 2023 for the full year. And we'll just see where they go from there, because I'm really long-term on the stock. I just like the stock and I'm happy to be in it long-term. And that's just me personally. And I just think anything potentially underneath will just naturally bubble to the surface over time if the company just thrives and succeeds. And by the way, $1.4 billion in cash on the balance sheet, over 300 million in free cash flow this quarter. Incredible stuff. They have little to no debt. It's about like 20 million associated with the French government and the response to COVID-19. But then when you go beyond that, they added another like 30 million in marketable securities this quarter. They have like 250-ish marketable securities, 250 million that is. And that's basically government notes and things they're earning interest on their cash. So in my eyes, the company is doing great and really moving in the right direction. But I mean, I'm just really patient and I'm just happy. I'm definitely happy, but Kobe Bryant mode. Job's not finished. Job's not finished. Have a good day.